Hey there, future wolf of Wall Street, ready to dive into the world of trading? Just kidding. You're probably more like a Wall Street guppy right now, swimming in a sea of numbers and charts. But that's okay. Trading can seem intimidating at first, like trying to learn a new language. Suits, jargon, numbers flashing faster than the speed of light. It can feel like you're in a high-stakes game where everyone else knows the rules. It's enough to make anyone want to crawl back into bed and hide under the covers, avoiding the complexity altogether. But here's the thing, trading doesn't have to be scary. It can be a journey of learning and growth. In fact, it can be downright fun. Imagine the thrill of making a successful trade, the camaraderie of working with a team, and maybe, just maybe, a little bit profitable. The joy of seeing your investments grow can be incredibly rewarding. Think of it like this, trading is like dating, but instead of finding a soulmate, you're finding companies with potential. Each stock is a new opportunity. Some are keepers, some are, let's just say you dodge a bullet. It's all about making informed decisions. Let's learn how to spot the difference, shall we? With the right knowledge and tools, you can navigate the market with confidence. Start by understanding the basics. Learn the terminology, the strategies, and the market trends. It's like building a foundation for a house. Educate yourself through books, courses, and seminars. Knowledge is power, and the more you know, the better your decisions will be. Practice makes perfect. Use demo accounts to get a feel for trading without the risk. Review your past trades to learn from your mistakes. Set realistic goals and celebrate your milestones. Trading is a marathon, not a sprint. Patience and persistence are key. Surround yourself with a supportive community. Join trading groups, find a mentor, and don't be afraid to ask questions. Remember, every expert was once a beginner. With time, effort, and the right mindset, you can become a confident and successful trader. So are you ready to transform from a Wall Street guppy to a savvy trader? Let's dive in and make some waves. First things first, let's ditch the image of slicked back hair and suspenders yelling sell, sell, sell into 5 different phones. You don't need to be Gordon Gekko to trade. Trading is simply buying and selling pieces of companies, stocks, or other assets. You're basically betting on whether you think the price will go up or down. It's a bit like gambling, but with more research and hopefully less desperation in your eyes when you check your portfolio. The goal? Well, it's not just to feel important while staring at a bunch of numbers on a screen. The goal is to make money, obviously, but also maybe learn a thing or two about the world along the way. Alright, before you go betting your life savings on something called Dogecoin, let's talk about what you can actually trade. The world of financial assets is vast and varied, almost like a zoo with different species, each with its own characteristics and behaviors. First up, we've got stocks. These are like little slices of ownership in a company. When you buy a stock, you're essentially buying a small piece of that company. You buy a stock, you own a teeny tiny part of that company. This means you get to share in its profits and losses. If the company does well, the value of your stock goes up. If it doesn't, well, you might find yourself anxiously checking the stock performance every day. Now you get to anxiously refresh their quarterly reports like you're the CEO. Next, we have bonds. Bonds are essentially loans that you give to the government or a corporation. Imagine lending money to the government or a company. In return, they promise to pay you back with interest over a specified period. They promise to pay you back with interest. It's like being the bank, but without the long lines and free lollipops. Bonds are generally considered safer than stocks, but they also offer lower returns. And then there are commodities. Commodities are physical goods that people need and use every day. Think oil, gold, coffee beans. These are tangible items that have intrinsic value. Commodities can be a good hedge against inflation because their prices tend to rise when the cost of living increases. Things people actually need and use. Unlike that limited edition Beanie Baby collection you're still clinging on to. Just me? Okay, moving on. Commodities can be traded on various exchanges and can be a good way to diversify your investment portfolio. Unlike that limited edition Beanie Baby collection you're still clinging on to. Just me? Okay, moving on. There are also other types of financial assets like mutual funds, ETFs, and real estate. There are other things too, but let's not overwhelm you on the first date. Mutual funds pool money from many investors to buy a diversified portfolio of stocks, bonds, or other securities. ETFs, or exchange-traded funds, are similar, but trade on stock exchanges like individual stocks. Real estate involves buying property to generate rental income or to sell at a profit. Real estate can be a stable investment, but it requires a significant amount of capital and can be less liquid than other assets. So, whether you're looking at stocks, bonds, commodities, or other financial instruments, it's important to understand what you're getting into. Each type of asset has its own risks and rewards, and the best investment strategy is one that aligns with your financial goals and risk tolerance. So, whether you're looking at stocks, bonds, commodities, or other financial instruments, it's important to understand what you're getting into. Each type of asset has its own risks and rewards, and the best investment strategy is one that aligns with your financial goals and risk tolerance. Happy trading! Now, the million-dollar question, sometimes literally, how do you actually make money trading? The basic principle is simple. Buy low, sell high. Sounds easy, right? If only it were that simple. Imagine trying to time the peak of a roller coaster ride. You want to buy in at the bottom, sell at the top. But knowing when those moments are, that's the tricky part. That's where research, strategy, and a little bit of luck come into play. Don't worry, we'll get to those. Section 5. To the Google machine. Research, your secret weapon. Shh. Before you even think about buying a stock, you gotta do your homework. No, not that dusty textbook from college. We're talking about good old-fashioned internet research. Read about the companies you're interested in, understand what they do, how they make money, and what their future looks like. Think of it like online dating, but instead of swiping left or right based on a blurry photo and a questionable bio, you're looking at financial statements and market trends. Way more romantic, right? Section 6. The tortoise and the trading app, long-term versus short-term. Now let's talk strategy. There are two main approaches to trading, long-term and short-term. Long-term investing is like that slow and steady tortoise. You buy stocks and hold on to them for months, years, even decades. You're in it for the long haul, baby. Short-term trading, on the other hand, is more like a hyperactive squirrel. You're buying and selling quickly, trying to make a profit off of small price fluctuations. Which one is right for you? Well, are you a tortoise or a squirrel? Actually, don't answer that. It's more about your risk tolerance, time commitment, and how closely you want to watch those market swings. Section 7. Oops, I did it again. Common trading mistakes, we've all been there. Even seasoned traders make mistakes. It's a natural part of the trading journey, and no one is immune to it. It's part of the game. The key is to recognize these mistakes and learn from them so you can improve your strategy over time. But hey, at least you can learn from others' mishaps, right? By understanding common pitfalls, you can avoid making the same errors. One classic blunder: getting emotionally attached to a stock. It's easy to get caught up in the excitement of a company's potential. You fall in love with a company, buy their stock, and then refuse to sell, even when it's plummeting faster than your hopes and dreams. This emotional attachment can cloud your judgment and lead to significant losses. Another common trap: following the herd. It's tempting to follow the crowd, especially when everyone seems to be making money. Everyone's buying a particular stock, so you jump on the bandwagon without doing your research. This can be a dangerous move, as the herd mentality often leads to irrational decisions. Newsflash: sometimes the herd stampedes right off a cliff. Just because everyone else is doing it doesn't mean it's the right move for you. Remember, trading is a marathon, not a sprint. It's about long-term success, not quick wins. Patience and discipline are crucial. Pace yourself, think rationally, and don't be afraid to cut your losses. It's better to take a small loss now than to hold on to a losing position and risk a bigger loss later. Unless you're trading actual marathons, in which case please disregard that last part. But seriously, always keep your emotions in check and make informed decisions. Stay informed by keeping up with the latest financial news and trends. Knowledge is power in the trading world. Reflect on your past trades and learn from your mistakes. Keeping a trading journal can help you track your progress and identify areas for improvement. Seek advice from more experienced traders and consider joining a trading community. Learning from others can provide valuable insights and help you avoid common pitfalls. Set clear trading goals and develop a solid strategy. Having a plan in place can help you stay focused and make better decisions. Celebrate your successes, no matter how small. Acknowledge your achievements and use them as motivation to keep improving. Finally, don't forget to take breaks and manage your stress. Trading can be intense, so it's important to take care of your mental and emotional well-being. By being aware of these common mistakes and taking steps to avoid them, you can become a more successful and confident trader. Happy trading. Section 8. Keep calm and trade on, you've got this. So there you have it. The basics of trading, without the intimidating jargon and confusing charts. It's all about finding the right balance between risk and reward, doing your research, and maybe having a little fun along the way. And remember, even the best traders started somewhere. They probably blew up a few accounts, made some questionable decisions, and maybe even shed a tear or two over a particularly volatile stock. But they learned from their mistakes, dusted themselves off, and came back stronger. And so can you. Section 9. Remember, it's called the stock, not the stock. One last thing. Trading involves risk. You could make a lot of money, but you could also lose some. It's like playing the lottery, but with slightly better odds and less scratch-off involved. So, don't invest more than you can afford to lose, and always be prepared for the unexpected. After all, the market is as predictable as a cat in a room full of yarn. But hey, that's part of the excitement, right? Now go forth, my little trading apprentices, and may the market be ever in your favor, or at least slightly less volatile than a teenager's emotions. Good luck.